How many traders out there would like to make like an extra $200 to $400 a day, whether you do it from a part-time or maybe even a full-time basis? You know, if you do it as a income to make a living off of, or maybe possibly you just want to pick up a few points or pips each day, whether it be 20 to 40, okay? And you love where you work at, you love your job, but you just want to make some extra income that maybe you can put into a way to savings to be able to take a vacation with, or just simply be able to save some money away for, I don't know, renovations on your home, whatever it may be that will allow you just some extra income to have a little bit more cushion in the bank. All right, so let me show you just how simple it is using a strategy that not only myself, but because I do trade the same strategy each and every day and I post my entries, a lot of them over on our Discord community, and you're welcome to join the Discord. All you have to do is find the link down in the description portion of the video. But we have traders that have passed tons of evaluations. I mean, there have been testimonials after testimonials of people who actually have learned, in a sense, by educating themselves the same way I trade and have passed their own evaluations. But the thing about it is, I know you have to, just because you pass an evaluation or maybe you're trading with your own funds, you have to make sure you're doing it correctly as far as having some longevity behind it. All right, just passing an evaluation or proving to yourself that you can become profitable or consistent just for a couple of weeks doesn't mean that it may pan out on the long term. So that's the thing about trading. People get frustrated with is like they see themselves being able to make a profit or money and then turn it around and then maybe losing it the week after. But I want to show you a consistent way of how you can make 20 to 40 pips a day fairly easy. And that's typically you can just take one trade a day and be done. If that trade doesn't work out for you, then you just look for another opportunity the next day. And I talk about, you know, ways here on the channel about risk management and things of how to get out of a trade quick enough so you don't take any drawdown. That's probably one of the biggest things that are reasons why individuals or traders blow their account, is because they allow themselves to move into situations where they have or incurring large amounts of drawdown. I talk about strategy on the channel here in reference to cutting your losses early enough before it even hits your stop loss. So knowing how to get out of a trade before it hits your stop loss to save yourself some money, okay? But today, I want to share with you the strategy that I perfected in a sense of being able to trade this each and every day that allows me to pick up, you know, I'm looking for at least on each move I make about 20 points, but you don't really need 20 points to actually make $200 to $400 a day. I'm going to show you how it breaks down the strategy itself and how you can trade the same way and make extra income. But first and foremost, I just want to show you, like, let's say, for example, I'm going to use a simple calculator here, and show you that if you were someone that was looking to pick up, just say 20 pips, okay? What is 20 pips really in reference to on the NASDAQ, okay? That's 5 points, because 5 points and each point is 4 ticks, so that's a 20 pip move on just on 5 points. So if I'm looking for 5 points, okay, I'm just saying hypothetically you're trading 5 points, right? Just picking up 5 points times 4 ticks, that's 20 pips, okay? Times the number of the tick value, which is $5 per tick, it's $100. You trade 2 contracts, and you do this once a day, you can pick up $200 a day, and that's an extra $1,000 a week. Now, if you're someone that says, okay, well, I want to pick up at least, say, 40 pips, okay, so that'll be 10 points, okay, times 4 ticks, and each point, that's 40 pips, or 40 ticks, times $5, okay, each tick, that's $200, one contract, but we double that and we go with 2 contracts. That's $400. So 400 times 5 will give us $2,000 a week. So we're just doubling it up in means of looking for, instead of 20 pips, maybe 40 pips. That's really, really easy to do on the NASDAQ, because the NASDAQ will make 20-point moves real quick and you're one and done, okay? As long as you take trades and looking for high probability setups, all right? But typically I'm looking for at least 20 points or more on each trade. So 20 times 4, what is that? That's 80 pips on one trade, okay? So anyways, I just want to show you, like, even from a part-time standpoint, or even if you want to do this full-time, how you can make, you know, an extra $1,000 or $2,000 a week. So let's go ahead and take this away here. We'll close that out. I'm going to show you just looking at a example. We'll take a look at this example that took place here on Friday at the close, or let's say not the close, I'm sorry, guys. Shortly after the market opened up. But what we always want to do when we're trading is first and foremost be able to look at the market itself to determine what is the direction of the market. So structure is very important when trading, okay? And unless you're able to read the market, you're going to struggle in trading, because market structure is everything. It allows us to see and understand the direction in which we should take our trades. So if you just pull up a higher base chart, if you trade time base or tick or volume, whatever it is, the chart style that you actually trade, pull up your higher base chart. Determine the sentiment, the direction of the market first. If I look at a 60 range chart, I can see we're moving to the downside here. If I pull up a 120 range chart, I can see just as clear that we're moving to the downside right here. It's evident. Okay, we're breaking structure lower. So on Friday, for example, I see the market making its moves to the downside. All right, pulls back, and then it's as it's pulling back, well, basically what it's doing is it made a low here, lower high, lower low, lower high, lower low. So that's all market structure is where the market is making higher highs or higher lows, or lower lows and lower highs, and breaking structure lower. When it pulls back right here, all right, I can see that, yes, we're breaking a bit of structure to the upside. But if I look at my higher base chart on the the 20th, yeah, I can see that we're pulling back as well. But that doesn't mean that we can't look for opportunity to take a short play, or as we're moving lower. So we can see here on 120 that the market is moving lower. Okay, we get a nice pullback here. Even on the 60 range, you can see it pulling back here. But on Friday, for example, if you pay attention to structure of the market, it's going to tell you what direction you should be looking to trade in. We got to pull back here. Yes, it breaks above this area structure here, but then it makes a low here, pulls back, and we break structure below here at, say, 5,072, 18,572. Now, what we want to identify at that point is, okay, it just broke structure. Is there an area of supply? It broke structure lower, so if we look above and we see some area of supply, and that's all it is just identifying key areas of supply or demand when the market is breaking structure. The key to how I trade is basically boils down to, we mark a zone on a higher base chart, and then we just scale down to a lower base to look for opportunity to trade, basically giving us more of a precise entry point. That's the purpose of scaling down. So when the market breaks structure below here at 18,569, it pulls back. You can see this area of supply. Mark the zone on the 60 range chart. And all we do then is just move down to, for example, 12 range chart, a lower base chart, to look for a more precise entry point. So I'm going to go ahead, mark this zone up here, put it on all charts, and now we're going to just move down to a 12 range chart. We want to use a higher base chart and then a lower base chart to get us into the trade. So then it pulls back to this area of supply after breaking structure here. Let's move down to the 12 range chart. And this is that 60 range demand zone that I just showed you. Not demand, supply. Sorry about that, guys. Supply. Aggressive selling, pulls back, supply right there. Move down to my 12 range chart, pulls back. We can see it tap into the 60 range supply zone right here. And at this point, all I'm doing is looking for the market to break structure lower. It plays around as it taps into the zone. We're looking for a structure break. It pushes lower right here. It breaks below this area here, or this structure right here at 18,582. This is a supply area within a supply area in a sense, okay? So I'm looking for just basically a supply setup after making one on a higher base. So it made a supply setup on the higher base chart, a zone there, scale down to a lower base chart, wait for the market to show you a structural break to where you now have a identified key area of supply to trade from right here. It breaks structure, pulls back. It broke below this area here, okay? Broke below this area. And then when it does that, you wait for the pullback. Supply right here, you go short. Wait for the break and close of the candle. And if you look at your higher base chart, it's 60 range at that point. You can just see, okay, where can the market run to? It's going to fill all these areas. There's gaps right here back to the downside, imbalances back to the downside, and possibly even run this low right here, all right? Lows of highs and lows, or double tops, double bottoms, triple tops, triple bottoms, whatever. Those are going to be areas where liquidity is resting at. So it made a low right here. So there's liquidity resting right here at this low. Made a low, made a high, broke structure on the way to the downside on the 60 range, pulls back to a supply area on the 60 range. I just moved down to my 12 range, look for that supply area, or look for a structural break on the lower base chart, which it did right here, broke below here, formed an area, or left behind an area of supply, pulls back to it now. So this larger base supply area is the 60 range. The smaller base supply area is off of the 12 range. Pulls back to the key area of supply that it just formed on the lower base chart. wait for the structure break. I'm not structure break. Wait for the break and close of the candle to go short, and we're going to aim for that low that we saw over on the higher base chart. Okay, right here, there's liquidity resting here at the bottom. As well, it's going to fill these areas in. There's gaps on this move to the upside that it made. There are gaps that the market needs to fill. There's areas where it has to fill back in. So I'm going to aim for that area back down here below it at 561 or 562. It's as simple as that. And the market goes down there and runs that low right there. We'll look at another example. Okay, so right here, 60 range chart, you can see there's a demand zone resting right here. We broke structure higher here. We broke above this area here at 18,760. And the market creates this, it's a demand area right here. So aggressive buying pulls back to the area of the zone. That's around 210. Somewhere around there on the 19th. Okay, so it pulls back to the area of demand, of course. All right, and when it does that, then we just move down to our lower base chart, look for a rejection, break structure to the upside, pulls back. There's a demand area resting. Let's see here, yeah, right here. Okay, buying to the upside, pulls back. Look for the rejection. Let's get the break and close of the candle and aim for the high right here at 723, just to scalp it up. Again, so if you got into the trade, let's say you wait for the break and close of the candle here at 714, and then you can scalp it up to around about 723, 724, pick up 10 points. Even on 10 points right there, times 4 ticks in each point, that's 40 ticks right there. So you quickly made yours, and over made 200 bucks, easily that day. So that, what did I say? 10 points. Points would be 400 bucks on 2 contracts. On 1 contract, it's 200 bucks. So, and the market just keeps pushing to the upside from there. Right up, it pushes up to fill these areas back to the upside right here. So, but you gotta be mindful because we did break structure as when it pushed lower here, it broke below this area here at 730. So you can definitely take it back up to what did I say here? To definitely the 24 area, possibly higher, to fill in these small areas of imbalances. I'm looking at the 60 range of this area that needs to be filled in right here, back up to the upside right here, and pick yourself up. So there's basically resistance resting right here when the market broke structure below or tapped into the demand zone. Look for a setup on the lower base chart, break structure, pull back, and look for to aim for the highs. But be mindful of what's above you here on the 60 range in this area right here. Okay, and you could have picked up your 10 points really easy and picked up again 400 bucks real easy, or $200 real easy. You do that one time a day, then you can easily make $1,000 a week. Just trying to get your 20 to 40 pips a day. So just want to share that with you. It's just a strategy and how I trade each and every day. One trade a day is all it really takes. And again, you can do this to make part-time income, or if you want to do it and you want to trade full-time and you got money put away to where you want to try to trade in the markets. But do yourself a favor and first and foremost understand the concepts, the basic concepts of trading, and that is really understanding the flow, the direction of the market, understanding market structure and price action. And I recommend definitely looking at things from a naked chart. Don't start stacking on a bunch of indicators. That's what clouds the minds of a lot of individual traders that want to get into this business. It did me that way for the first year, almost 2 years, until I really was able to kind of go back to scratch and take everything off my charts. Truly take a look at the market for what it was and understand market structure. That's when everything started to make sense for me. So outside of that, that's all I have to share with you guys today. But again, a simple strategy and a way in which you can make 20 to 40 pips a day very easily. And just back test it, forward test it, try it yourself. Watch the videos here on the channel. Become a sub today. All you have to do is click on that sub button. Go ahead and do it now. Make sure to turn your post notifications on so you don't miss one of the uploads here on the channel. As well, if you found value in today's video, please drop a like on the video right now. Hit that, smack that thumbs up button, that like button. I appreciate that. If you're interested in joining the Discord, you can scroll down to the description portion of the video. You'll find a link that says become or join the Discord. Click on that and you can become a Discord member for free. If you're interested in becoming an elite member, because people always DM me and ask me about the elite membership, it's only $6.99 a month. I used to always refer it to like most people paid more than that for a price of a cup of coffee a day. We're talking about $6.99 a month is what I'm talking about. And you gain access to the trade breakdown videos and other video content, as well as the video playlist, which is a hand selected link by link series of videos that I've picked off the channel and so people can kind of curve their edge and really focus in on videos that I've highlighted, that I cover the strategy in great detail. So maybe you want to become an elite member for $6.99. Find that link down in the description portion of the video as well. Right below the link that says Discord, you'll see a link there that says become an elite member. Click on that. 2 tiers will pop up. Make sure to choose the one that's listed for $6.99. I just posted a trade breakdown video today. There's already tons of those on there that you can watch, where I go into detail about trade setups, where to place stop losses, where to take profit at, things of that nature. As if you're sitting next to me, we're walking through the trades that I take, and many of them that I post over on the Discord community. So do yourself a favor, if you choose to do so, by clicking on that and becoming an elite member. For all those that have already, I appreciate your support, because that's what you're doing to support me as a content creator and my efforts to continue pushing out this valuable content. But outside of that, I appreciate everyone. Hope you have a fabulous and safe week trading. Take care. See you in the next one.